Today, folks, I am now getting wrecked on my Google position. I gobbled up as much as I could before earnings. Was that a mistake? We're going to find out in this video as we review Google and Microsoft stock earnings that are now tanking miserably after hours. I'm sure as many of you might not be surprised, but the market has been skyrocketing the last 3 months and clearly has kind of hit overbought territory because Microsoft beat analyst expectations and is down 1%. Google, I don't know what analyst expectations were, but clearly they came in at a disappointment because Google stock is down damn near 5%. And I just want to break down these earnings, break down my feelings and my positioning around them. And if that is a conversation you appreciated, my full clarity, hit that like button because I wanted to buy as much Google as humanly possible long before this earnings announcement because the stock was just running aggressively. It was the cheapest S&P top 10. I got about 55 shares at an average cost of about $140 a share, which now the stock is sitting at around 146. We'll see if it starts going back down to the closer to the 140 range. I do have a rule of thumb with like my Tesla and Google position that I've been picking up. These have been my starting positions, and if they dip below where I've currently bought, I would start accumulating a bit more because I'm very happy with my entry points. But again, I didn't want to chase the market here, so I've been stemming off this kind of last week or two heading into these earnings cycles. So let's just talk about earnings themselves, because with Google, I am blown away by how good these earnings were. I don't know what analyst expectations were. We've seen revenues basically on a year-over-year basis on the quarter up 13%. Over last year, not the same kind of growth from the year end. I mean, they did $307 billion with about a 10% revenue growth, which just ridiculous. It's nice to see it staying in the double digit area. This is nowhere near good as Microsoft, as we'll see. They've been able to increase margins up to 27% from 24%. So they're starting to play in the realm of all the big players. I always realize that the biggest players are playing in the $20 billion of net income. That's Apple's range. That's Microsoft's range. To be in the real realm of a mega cap company, in my opinion, where I want to be buying are these companies that are starting to net income realize over 20 billion, because that's what makes me think that Google's been so cheap here, because they went from 13 billion to 20 damn billion dollars on a year over year, 59 billion to 73 billion. Just great, ecstatic, nothing that I could honestly complain about. When we take a look at YouTube, I mean, YouTube went from 7.9 billion to 9.2. Google search and other from 42 billion to 48. All in all, advertising has been growing at an insane clip here. Google Cloud also growing at an insane clip, a behemoth from 7.3 billion to 9 billion. All in all, I don't think you could see something more resilient. And what really sticks out to me the most on Google earnings here, above all else, is the balance sheet, because I can't find a comparable right now when you're talking about a total net assets hitting 402 billion versus a total liability of only 119 billion. This company's damn near got 285 billion dollars in underlying assets. Absolutely ridiculous that is. I mean, let's take a look at Microsoft in comparison here. Now, Microsoft's numbers are much, much better from a growth standpoint, which we have to recognize. I mean, they're up 18%, doing $62 billion. Operating income was astounding. Net income was 21.9. So we can see that, Microsoft's net income is now getting close to Apple, because Apple's doing, I think, usually around 23 billion. So Google, Microsoft, Apple, they're all playing in this 20 to 23 billion dollar realm, but they were able to increase this net income by 33%. I mean, damn near jaw dropping. These numbers at these scales, I think, are largely underappreciated today and how numbed we are by it. But what was most impressive to me is when you look at the growth of all their sectors here, everything's growing pretty much in the double digit category, outside of a few things like Windows obviously stagnating. But when you look at Azure, 30% growth. When you look at like Xbox, I think Xbox, I was trying to wrap my head around how they were able to grow Xbox services by 61%, but then I had to remind myself the deal with Activision Blizzard only closed on October 13th of 2023. So it's likely we were getting some realization of that coming into the fundamentals there as well. But again, you can't really complain. If we take a look at the numbers as it stands basically on their little balance sheet here, just to get an idea of how much they've been growing from 102 billion to 118, 52 to 62 just on a year over year basis in the quarter. Net income from 33 to 44. I mean, again, I wouldn't put this in the basket of deserving to trade at a 40 times multiple where they sit. Again, that's probably why we're seeing a healthy pullback in after hours. But even in comparison to Google, you look, they have 400, and what's most incredible here is that it's been, it's been increasing at a pace that's also is jaw dropping as Google's from $411 billion to $470 billion in assets. Total liabilities set at about 232. So even still, they're kind of getting in the realm of assets, that Google's playing within here. I still think very close comparable. These numbers are awesome. I mean, just brutally awesome. I just wish Microsoft was able to trade at a bit of a better value, and I'd be all over it. So how do I feel about these earnings all in all? When it comes to my portfolio, if we get a big enough dip, I'd obviously buy all these companies, including Apple. I'm really worried for Apple now, because I think that these are the prelude, considering Apple has had the worst revenue and earnings per share growth, that if they don't see anything on the holiday quarter to any significant degree, that they could really get hit hard here. And I think the broader market's going to be down tomorrow in general. So Apple probably get hit with that, considering now we're seeing, look, Google is almost down 6% now, and Microsoft is down almost 1 and 8.8. And this is all after hours trading. And again, I'm just sitting here and we're only at, 4:40 p.m. It's not even 5 p.m. We haven't even hit the earnings calls. So maybe the earnings calls can change a little bit of this vibe, but I doubt it. But yeah, I'll be sitting here and buying Google if it drops below that 140 mark. And I'm still very happy with where I sit, with where these companies' trajectories are headed. So I think we're just in the early phases of, what was a wicked rally coming out of the holiday season. And now we're going to have to wait. I think we're going to see a bit of a stuttering in the market, probably come March, April into the summer, until we start seeing a real cyclical cut on interest rates. And I think that's when we'll see a significant impact on the lower half of the market. But time will only truly tell. And I'll pass that question off to you. I'd love to know what you think in that comment section below.